and I am the state program manager with Maryland Business Roundtable for Education, commonly referred to as MBRT. And I'm so glad that you guys decided to join in with us today. This is part 2 of our financial literacy series. And today we're going to be talking about something that a lot of people find it very, very difficult to deal with, and that's debt, the good and the bad parts of it. And I am so thrilled and honored to have on the line with us today Mr. Dustin Wilder from M&T Bank, and he is a financial whiz. And we're so glad that he's here with us today. And we're going to get started with you guys. And so I'm going to kind of start off a little bit by allowing him to introduce himself and kind of tell you a little bit about what he does with M&T Bank, and then we'll go ahead and get started with our session. So, Dustin, thank you so much for joining us today.
Yes, thank you, Annalisa. Thanks for having me.
Awesome. Yeah, go ahead and tell us a little bit about yourself if you don't mind.
Okay, yeah. So my name's Dustin Wilder. I'm a senior relationship banker with M&T Bank here in LaVale, Maryland. So I've been with the bank a little over 2 years now, and I actually got my career started after graduating from college about 6 years ago, working in the insurance industry. So I worked for Allstate Insurance, mostly selling home and auto insurance for a good while before I made the transition to the banking industry where I am now. And I was fortunate enough when I started with M&T Bank to go through a training program with them. So it's called the Sales Development Program. It was a 6-month program where I got to learn a lot of information. Our M&T headquarters are up in Buffalo. We also have a strong presence down your way towards Baltimore. Obviously, we're the official bank of the Baltimore Ravens, and the stadium is named after us as well. So got to travel a good bit during that sales program. Like I said, learn a lot of information and got to meet a lot of great people as well within the bank. So that's really helped me, and I hope will help me propel my career going forward.
Awesome. Yes, we definitely all know about M&T Stadium and the Ravens. So that's a great partnership, I'm sure, for you guys. And thank you for all that you do for Maryland and the city of Baltimore. So I'm sure everyone appreciates it. So before we kind of jump into things, quick question for you. I know that we're all kind of going through transitions right now, especially with the state of the world right now with the COVID-19 virus being so rampant. How has that affected what you're doing right now or your scope of your work right now?
Yeah, so it's really changed, my job specifically a tremendous amount. I mean, from a bank branch operations, standpoint, all of our M&T branches have gone to drive-through only.
Wow.
So, our hours have remained the same, but, we're trying to limit as many people as possible inside the branch, just to limit that person-to-person exposure and interaction. So, it's definitely challenged us and, kept us on our toes in terms of how we operate. For what I do, I open up a lot of new checking and savings accounts. I'm a loan officer as well, so do a lot of personal loans, auto loans, home equities, and so by us trying to limit the interaction inside of our branch, I've actually done a lot of things through the drive-through. So I've actually opened accounts for people through the drive-through. In fact, last week I actually closed a loan through the drive-through, which was quite interesting. Just to tell you the quick story, the husband and wife that I had talked to on the phone and taken the application, the morning that they were scheduled to come in and close, I told them, I said, hey, if it's all right with you, would you mind, me just going outside to have you sign all the paperwork, just with everything going on. And the guy said, well, my wife's going to be coming from work, so we're going to be in separate vehicles. And I said, okay, that's fine. So sure enough, that particular day, of course, it's raining outside. Now, thankfully, our drive-through has a covered canopy, so I was able to have both of them squeeze in, back-to-back cars, and took my clipboard out there with all my paperwork, had the husband sign, and then went to the wife and had her sign. So we made it work, but all that to say, we're having to adjust, kind of on the fly. And, it definitely changing the way we operate.
Wow, that I'm sure it just makes things. You have to be very innovative, I'm sure, in how you approach your work. One of the things I heard you mention, and with that entire story, was that you're doing loans. Now, I'm sure a lot of people probably wonder, like, in terms of debt, how are loans being affected right now?
Yeah, so they're being affected a great deal. A lot of the credit bureaus and credit institutions out there are actually not sending any delinquencies at the moment. So that's one, positive thing, that if you're late on a payment or you're in the delinquency phase of paying back a loan, it's not going to negatively affect your credit right now, which is good. I'm not sure exactly how long that'll go for, but yeah. So just for all the the students out there and everyone watching, there's three main credit bureaus that we as banks and financial institutions use to pull your credit report and get a credit score when you apply for a loan. So there's Experian, Equifax, and TransUnion. And one of the things that we'll hopefully get to, for the students out there that maybe don't have any established credit yet, is for me to show you how you can actually go out to look at your credit score online. And then, for those folks that maybe do have established credit, there's a way that you can actually check your credit report to see, if there's anything that's incorrect or wrong on there, that we can work on correcting.
Okay. For the students that may not fully understand, what's the difference between credit, or how does credit fit into the grander scheme of debt overall?
Right. Yeah. So the biggest difference between a debit and a credit, kind of approaching that question from a banking perspective. Of course, you have your checking account where, like, a banker may say, your account was debited $100. So that means that money was taken out of your account, thus decreasing the value. So, you say you're paying a bill, you pay your cell phone bill every month, that money is being debited out of your account. Um, Credit would be like if you get paid, your paycheck comes into the account, so that's crediting your account, thus increasing your balance. So from like a bank account perspective, that's kind of how that works. Financial institutions also have, of course, debit cards and credit cards. So obviously a debit card is linked to your checking accounts. Anytime you make a purchase, or say you go to the ATM and you withdraw cash, that is tied directly to your checking account balance. Whereas a credit card, on the other hand, is basically borrowing money from the bank or credit union to make a purchase, with the understanding that that money is going to be paid back at a later date, oftentimes with interest. So a credit card is essentially a line of credit that has a predetermined maximum credit amount, that people can use to make purchases with.
Now, that predetermined limit that you said, is that standard across the board, or how do they determine what your limit is?
Yeah, so every institution is a little bit different. Speaking for M&T, we kind of look at the full credit picture for an individual if they're applying for a credit card. So obviously the credit score is a big piece of that. Their character in terms of their repayment method on previous credit accounts is also something that we take a look at as well. So it really just depends. I mean, there's a big long mathematical equation that goes into it, and of course we have a team of underwriters that takes a look at everything when it comes through. But I mean, it can vary. So we can do credit card maximums amounts from as little as $250, all the way up to $25,000.
Wow.
So yeah, it really just depends on your credit worthiness to make that determination for how much you can get approved for.
Okay. Now, when you say credit worthiness, I'm thinking of a student that maybe is just starting out. They maybe got their first job and they are applying for their first credit card, or they get their first credit card. How do they start to build their credit profile, or how do they start to obtain credit?
Right. Yeah, that's a really good question. I know it's relative to a lot of the students listening today. So the what I typically recommend, for students that don't have any established credit, is to get what's called either a secured credit card or a credit card through like one of the local retailers, maybe like a Kohl's or a Lowe's, or somewhere that's probably going to be more lenient in terms of them, approving you for that credit card right away. Um, so that's certainly a good option for a lot of students. If you go the secured credit card route, basically what that means is you're putting up a certain amount of cash on the front end that a bank will hold as collateral. And collateral is basically something pledged as like security for a repayment on a loan. So that way, if you default on your monthly credit card payments, the bank has that money that you've pledged up front to pull from to be able to take that payment. So, and in fact, just this year in January, M&T came out with a secured credit card. So now we have that option, for these particular students or people that either don't have any established credit or maybe have damaged credit and they're working to build it back up. So, like I said, it's a great way to build your credit, but it also, we limit the amount that we'll give you. So I believe $500 is the maximum. So which is also nice because it doesn't allow people to kind of go overboard with the spending in terms of their credit maximum.
Okay. I want to kind of shift a little bit. So I heard you mention especially about the secure card. So I'm thinking about the student that just graduated high school or may even be still, in high school, maybe just a senior, and they've got a credit card or they're a freshman in college. They don't have a lot of income coming in, but they have this credit card that they may use for emergency expenses or incidentals or whatever the case may be.
Right.
How or what tools can students use to make sure that they're getting the correct type of card versus you, or using that card versus a debit card, especially if they have both, so that they're maintaining a good financial health and they don't find themselves in debt?
Yeah. Yeah, and that's a really good question. I think what it all boils down to, honestly, Annalisa, is really just the discipline to only spend it for either the things that you need or, set aside certain pieces of your budget or bills that have to be paid on a monthly basis to only use your credit card, for those things. Speaking from personal experience, I was blessed to have a credit card from when I was very young. My parents opened one up in my name, and so not only did that help my credit score once I became of age, but by the time I started driving, my parents at that point gave me the credit card and said, this is for you, but we only want you to use this for purchasing gas for your car. Like that's the only thing you can use it for. So I think for the younger folks that are just starting out, it's really important to kind of set the boundaries for what you're going to be using that credit card for, because I mean, as we know, especially right now, it's so easy to just go online or go into a store and see something and just, have that impulse purchase and think,
Right.
oh, credit card, it's no big deal. I'll just use it to make this purchase. Well, the more times you do that, the more trouble or potential trouble that you get yourself in.
Yep.
So I think just setting that discipline on the front end and saying, okay, I'm only going to use this credit card for certain expenses that I know I can pay back right away or at the end of the month, so that I'm not having to pay interest on it. And so that's the other big piece of it, is this interest payment. So if you're accumulating these big balances on your credit card, well, if you're only paying the minimum monthly payment amount each month, a good chunk of that is going towards interest. So you're really not diminishing that principal balance all that much in the grand scheme of things. Um, so again, just speaks to the importance of setting aside the particular budgeting categories that you're going to use the credit card for.
Yeah. Okay, so we've kind of been really nice about it and talked about the good parts of credit. What are some of the potential pitfalls that a person can find themselves in, where they find that the credits are not going so well, but now you find yourself, having more debits and finding yourself essentially in debt? How does that happen, and what does that do to your overall credit score?
Yeah, so there's a lot of factors that go into it as far as how it affects your credit score. Most like loan repayments or institutions will allow a certain grace period in terms of making your payment on time. So a lot of times there's a 10-day grace period, and even after that, there are certain levels to where your payment is late before it goes into what's called a delinquent status. So a lot of places will give you 30 days or 60 days, to make up that late payment plus what's currently due before it really has a negative impact on your credit. But yeah, just talking about bad debt in general, um, what what's really the worst kind of debt to have is those credit cards with really high interest rates. Maybe in the 20% to 30% range. Just because, like I mentioned previously, if you do incur balances and you're only paying the monthly minimums each month, it's so hard to completely pay off, that debt when you're only attacking it with just a little chunk, every month or every so often. So obviously the biggest thing is on the front end to not put yourself in that situation. But if you do, um, what I would recommend, so I'm a big advocate for a guy named Dave Ramsey,
Mhm.
the financial guru. Um, in Nashville, Tennessee, which happens to be where I'm from. So he's really, really good at what he does. He's got many books. He's got multiple websites. He does podcasts. He's got his own radio show. Um, and hopefully at the end, I've got a couple links and websites to kind of direct the folks, to those resources that they can kind of take advantage of as well. But um, he is a big proponent of minimizing like the credit that you have. Like he doesn't even believe in having credit cards at all, which I don't totally agree with. But that's just part of his teaching. And so he also has what's called the baby steps.
Okay.
So there's 7 baby steps. If you go out to his website, you can look at all the details on them. But I think it's interesting because the first 2 are really the biggest ones. But a lot of people that don't know about Dave Ramsey or his teachings think that like paying off your debt should be the first thing that you do to kind of help your financial situation. But he actually says his first step is putting $1,000 in an emergency fund.
Oh, wow.
That kind of speaks to, grandma always said, there's going to be that comes. It's not a matter of if, but when.
Right.
So having that $1,000 set aside in an emergency fund is going to be really important when, maybe you're driving around, you have a flat tire, or like we're experiencing right now with this coronavirus, maybe you get laid off or you're furloughed from work and you don't have any income coming in. So that $1,000 emergency fund is going to help pay those bills and expenses, during this temporary time period. So after that first baby step number 2 at that point is then to pay off all your debts. And there's a couple different like methods out there that folks can read about or learn about in terms of how to attack that debt. He advocates for the snowball effect, which is actually paying off if you have like multiple balances. Say you've got a loan, credit card, maybe some other things out there that you're paying on monthly. So he says to pay the smallest balance first. So that way you can pay it off quicker. And then the money that you were putting towards that small amount, you then put on the next biggest amount of your debt and then pay it that way. So it's essentially a snowball that, as you're paying stuff off and using that excess money that was previously going towards those debts, you can attack your higher balances or your higher interest rates, loans like that.
And that makes logical sense. So kind of along those same lines, let's say that there's a student that unfortunately has already found themselves in a bit of debt and they're struggling right now to get themselves out. What kind of potential situation could they find themselves in, or what could they do to start to try and turn that around? Because we don't want that to become a lifelong thing for them.
Right. Yeah. So, having damaged credit is worse than having no credit at all. Just because it's so much harder to build your credit score back up when it's dropped down and been damaged so much. But for those people that are in that situation, unfortunately, there are some ways that you can get out of it and help build your credit score. So the secured credit card that I mentioned previously, there's what we call limited underwriting to be approved for those types of products, just because you're putting the cash up front. So, we know that you're more likely to, or the bank's going to get their money back on that, even if you default on your payment. So the secured credit card is a good option. We also do at M&T, we do a lot of what's called consolidation loans. So if people have, a lot of debt, and it's certain different loan accounts that they have, or maybe they just have one, but it's a really high interest rate. Because before this year, interest rates on like personal loans or unsecured loans were quite a bit higher than what they are now. As of April 1st, the Fed dropped the prime rate down to 3.25%. So basically, the prime rate is what's used to determine interest rates for all different types of loans. So we do a lot of home equity line of credits as well. So basically what that is somebody that owns enough percentage of their home, they can actually use their home as collateral to get a loan for a certain amount. So kind of like a secured credit card where you're putting the cash up front. Basically, you're using your house as your payment default in the event that you don't make your payments on the home equity line of credit. Um, so the rates right now are really low because of everything that's going on and the Fed's dropping the prime rate. So I say all that to say, with a consolidation loan, um, maybe you're paying on a loan right now that's like 15% interest. Well, M&T right now, we have a loan that's only 2.99% interest, that you could consolidate. So basically, you just bring that balance that you have on your high interest rate loan over to this new loan, and you're paying a lot less interest, over the course of however many months, you set it out for.
So that allows you, it seems like, to get the loan paid off quicker, if I'm understanding correctly.
Yes, because ultimately you're saving money by not having to pay so much interest,
Interest.
month going forward. Yeah.
Okay. Well, a few other questions, because I know you're really really busy right now, and I again appreciate your time. You've spoken a lot about credit scores. Is there a range on a credit score? What's considered a good credit score versus a bad credit score? And I'm thinking about for the student that gets a copy of their credit report or goes on one of those apps and downloads and sees what their credit score is. How do they determine what their financial health is, if you will,
Yeah.
based off of that score?
Yeah. No, that's a really good question. And for, people that aren't as familiar or haven't really looked into it, I know it can be overwhelming. So a credit score is basically a three-digit number that shows your credit worthiness. So the scores range from about 300 up to 850. So obviously 850 would be a perfect score. We kind of have a chart that we use with M&T. So based on your credit score, it kind of puts you in a certain category. So basically anything under like 660 is going to be fair, or if it's considerably lower than that, it may be considered poor. So anything above that is going to be either good, very good, or exceptional. So 660 is kind of that break even point, at least with M&T. Obviously all banks and credit unions are a little bit different in terms of how they judge your credit worthiness. Um, but anything above that is going to be pretty good. I generally recommend people, if they have a smartphone, to use the Credit Karma app.
Mhm.
That's what I use personally as well, and it allows you to check your credit score for free one time per week, and
Oh,
so
wow.
it stays updated, and it allows you to see exactly why your score is that certain number. Um, so one of the things that I'll just kind of touch on really quickly is the factors that make up your credit score.
Yeah, that's good.
Yeah, so there's really five main factors that go into this three-digit number that most people see. So the biggest factor is the payment history. So loans that you've had before, or credit cards that you have before or currently. If you're making your monthly payment on time, then that payment history category is going to be what affects your credit score the most. So that makes up 35% of the credit score number. The next most important category is the amounts that you owe. So basically, that's if you have a credit card that has a maximum limit of $5,000. What we try to tell people is to keep the balance as low as possible, because the credit bureaus take a percentage of what you owe versus what you have available to use, and that's what makes up that category. So if somebody's got a $5,000 limit and they've maxed it out, they owe $5,000 currently. That's going to negatively affect their credit score for that category. The next one is your length of credit history. So this was a big one for me personally. That I said I was fortunate enough to have with my parents getting me a credit card early on, is because the longer that you have established credit accounts out there in your name, the better that's going to make that category look for you. And then the other two are what's called new credit, and then types of credit. So on types of credit, that's just basically like the variety of credit accounts that you have. So the more variety, the better, of course. And then new credit, so that's almost like what we call hard inquiries. So
Okay.
if you're like constantly applying for different credit cards, that's going to hurt your credit score a little bit.
Wow.
10% of what makes up your credit score, so it's not a huge deal. But at the same time, like I said, if you're going out and try to apply for credit cards at all these different places, those hard inquiries stay on your credit report for up to 2 years.
Okay.
So the more inquiries that you have, the worse it is, generally speaking. So if you can limit, what all you're applying for, then that's going to help your credit score.
Okay. I've kind of got two other questions that kind of are revolved around that. So the first one is, I guess, how would someone go about starting to obtain credit? Like, what is required to obtain credit? And then, kind of along those same lines, once you obtain credit, like, are there any safeguards that one should take in protecting that credit or making sure that no one else is able to access their credit?
Right. Yeah, absolutely. So what I would recommend for the younger folks out there, the first thing that we kind of start with here at M&T, we use what's called a financial fitness pyramid, that basically breaks down all the aspects of which you can use the bank. So at the bottom, we have what's called ways to use the bank. So that's going to be like your basic checking and savings account. So, for those like teenagers out there, for example, that don't have a bank account yet, that's what I would recommend first is to open up your own bank account. Depending on how old you are, you may have to have like a parent, on there as a joint owner. But opening the bank account, having a debit card, so that way you can kind of learn, how to use the debit card, how everything works, how the money coming in and money going out, and all that is broken down. And then once they get to the point where they're ready to like use a credit card to help establish credit, um, really the biggest thing is just opening up your first credit account. And so like we mentioned, a secured credit card, um, or like a retail store credit card is a good way to do that. But one of the important things to remember during that process is to protect your personal information. So of course everybody has a social security number, and anytime you apply for credit, that number is submitted with your application and is obviously used, to help determine who you are. So one, knowing your social security number is important. I know for a lot of kids out there, including myself, you don't think about that early on, so you don't necessarily have the need to know it or remember it. But keeping your social security card and your wallet or on you at all times is something that would be beneficial. And then two is protecting that information. So unfortunately, there's a lot of scammers and fraudsters out there. Actually, here at M&T, about 2 weeks ago, we were part of a scam, and I remember it was on a Friday. We just were getting bombarded with calls from people saying that had gotten a text message saying that their M&T checking account was locked, and so they're wanting to know what was going on. And ultimately, somebody was acting on behalf of M&T, trying to get people to click on this link to put in their personal information. At which point, they confiscate that and take some of their money. So, we don't even text our customers here at M&T. So, of course, that was the conversation that had to be had, was to let them know, hey, this is just a scam. Unfortunately, I did deal with a person in particular that went through with it, not thinking or not knowing, and so we use what's called Zelle through our M&T mobile app. It's a person-to-person payment system.
Right.
And so what had happened is once these fraudsters were able to access our customers' bank account information, they were zelling the money out of it to their own accounts or whatever. So, we had to have the guy come in, close out all his old accounts, open up new ones, get new debit cards and all that stuff. So, it's just a hassle. And of course, we do all the legwork on the back end to try to recoup that money for our customers.
Right.
But again, it's just one of those things. It's such a pain, to have to go through, and such a hassle for our customers. So, making sure that you protect your personal information with the Social Security card, being, or Social Security number being first and foremost, is of vital importance.
Right. So I was just thinking as you were saying that, we know many of our students that participate in our programs and that, are watching right now, they live in a almost completely technical society where they're constantly on their phones or constantly clicking on this or, responding to things, via text or via email. So I'm so glad that you brought that up, just, because I'm sure some of them maybe have even received, emails or text messages. I actually received one the other day from a bank saying that I had $1,000 or something like that. And I was like, I don't even bank with you. How do I have $1,000? And and my father, unfortunately, was vilified basically in the same way that you said. And he didn't even think anything of it again. And he clicked on it and they almost wiped out his entire checking account. He was able to get it all back. But as you said, it's the hassle of having to go through that. And it's, something as simple as, just clicking on a link can open up
Yeah.
yourself to be vulnerable to have someone come in and completely ruin everything that you've worked hard for, whether it's
Right.
actual cash or whether it, as you said, it's your credit profile and your credit health. And as you said, it's very difficult to get it back on a positive side once it kind of takes that dive. Um,
Yeah.
I know we're kind of getting close to our cutoff time, so I kind of wanted to just give you a few moments to just kind of wrap up and kind of mention anything that we may not have touched on that you think would be important for anyone that's viewing to know today about how to just maintain a healthy credit profile and just how to kind of safeguard themselves. And again, if they find themselves in a not so positive, healthy or financially healthy situation right now, maybe some steps or some, helpful tips they can take to start to try and get themselves back on the mend, especially during a time like right now, where you said there's so many people that are finding themselves in a different financial status because they've been furloughed or laid off, unfortunately. So any last
Right.
things that you kind of want to go into to tie together? The floor is yours.
Yeah, absolutely. I appreciate that. So, hopefully you've been taking notes out there, or maybe using the notes app on your phone. But I want to give a three or four links that you can write down, and maybe we can help get information out on the back end as well. But I mentioned Dave Ramsey, the financial guru out of Nashville. He's got two websites that I use on a regular basis. So the biggest one is called smartdollar.com. So that one is basically like a step-by-step guide to handling money, just kind of generally speaking. Um, and then the other one that is specific to monthly budgeting is called everydollar.com. Um, and so you can go out there and, basically make it your own, put in all of your expenses and income, and do a monthly budget. And I know the guy tomorrow, Ramsey, is going to be speaking to that a little bit more. But the smartdollar.com is really good. It breaks down the baby steps for you, everything like that. The other one in terms of credit it's called annualcreditreport.com. So this is the one that I every day with my job encourage folks to use, because within each of the three credit bureaus, you can check your credit report one time for free per year. So that's a really good way to, if you maybe use a Credit Karma app or whatever you may use to check your credit score occasionally. If you look at your number and think, well, that doesn't seem right, maybe a week ago your credit score was 700 and then all of a sudden it dropped down to 650 or whatever. Going out to this website, annualcreditreport.com, may be very beneficial because you can see every credit account that you've had, ever out there. So if there is something that you think is incorrect, excuse me, you can go through the process of disputing that, and making it right. And then the other website that I would encourage folks to go out to is specific to M&T. So it's going to be mtb.com/money mentor. So I've had the privilege this year to be what's called a champion for our M&T Money Mentor program that we started. Basically, it's a financial literacy program that is for strictly educational purposes to people within our communities, and ultimately is the reason how we got connected through Carrie Pannoni to do this call today. And so there's a lot of really good what we call online digital modules out there on this Money Mentor website. So basically, we have two different ways that we want to educate folks in our communities. So we have the digital piece that I mentioned. So there's, I believe, 25 different modules ranging from all different types of topics, including credit scores, basics of banking, investments, saving money for college, all different types of things. They're short. They're designed, I believe, 3 to 10 minutes each. They have a lot of charts and graphs and videos embedded. Basically, they're designed to grab your attention and keep your attention. We didn't want to make it like a long form article where you get bored reading online. So they're short bursts of information and content around money management, and then we also do what's called in-person workshops. So myself and the other champions in our region will go out to these businesses and meet with a group of people, and basically we just educate them on these specific topics. So our in-person workshops, we have 5 or 6 different categories that we go through. They're 45 minutes to an hour long, and again, the idea behind it is not at all to push M&T. We don't advocate for any of our personal M&T products or services. We strictly just want to help educate folks on how to put themselves in a better place financially. And so that's kind of the idea behind this Money Mentor program. So especially right now, when most of you watching probably don't have anything better to do, being quarantined, I would encourage you to go out to the Money Mentor website. You know, maybe maybe you've never looked into your credit score.
Right.
All the stuff we talked about today, is on these digital modules that you can look at, and there's even like quiz questions included in there as well. So it's interactive, which makes it a little more fun. So like I said, I would encourage you to go out there and just better yourself financially by taking advantage of these tools and resources.
That's awesome. I mean, you've given such great information and the tools and the website. So thank you so much for that. And thank you so much for your time today. You have been amazing. I know that everyone that's viewed the program today has definitely been enlightened and given some things to think about and some safeguards to make sure that we're protecting ourselves, especially during this vulnerable time where finances and every penny definitely counts right now. So we thank you so much. For those of you that are viewing, we've added some of those links that Dustin just gave us in our chat. So if you see those or if you have any questions about anything, please feel free to reach back out to us. Or if you're in Allegheny County, please stop by M&T and see Dustin and all of the people at M&T. I'm sure they'll take great care of you. That's going to be our time today. We want to thank Dustin again and thank all of you so much for tuning in with us for part 2 of our financial literacy series, Money Talks. Tomorrow, we would like for you guys to join us back for our final part of our financial literacy series, where we are going to be discussing budgeting. So it's going to really tie in a lot of the things that Dustin talked about today, and it's definitely going to help you improve your financial health. So again, we thank you all for joining us. And on behalf of Dustin, myself, and everyone at MBRT and M&T, thanks for watching Money Talks today, and we hope to see you guys tomorrow. Take care.